This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
Hey, we appreciate you being here with us on the Retirement Solution with financial advisor Jon Hicks, founder of J. Hagan Capital. And retirementsolutionshow.com is where you can go to start the conversation with the team at J. Hagan Capital. We are here to help you figure out how to take your hard-earned money and now make it work for you in your retirement years. We've also got links posted in the show notes, so you can just click there, or again, it's retirementsolutionshow.com. Something that we have been talking about forever and ever and amen, it seems, is the incredible bull run that we continue to be on. There have been a couple of hiccups, but basically, are we on year 14 now of a market bull run?
Absolutely.
How
crazy is that?
I mean, crazy because it's unbelievable.
And it wasn't lost on me the Randy Travis, the Randy Travis homage there a second ago. Forever and ever, amen. Yeah, so that's good. And there is a tremendous amount of holy moly. Can we keep this run going?
Right.
I think for the next 4 years, there's a great chance of that. And I say 4. Let's focus on this. For 2 years, there's a little bit of a red wave. That doesn't mean that it's going to go any political way that anyone wants. But I do think that the wind is at our back for doing some very positive things. When we look at the advent and the catalyst of artificial intelligence and machine learning, we got to be very careful that this does not turn into a very disruptive element for humanity. I'm not messing with that. That is very true. Congress and the legislature are going to have to do something to make sure we can respect our own privacies and things like that. There's a lot of work to be done. But guys, this may be as interesting, if not a more poignant piece of time than even the Clinton era. After the Reagan tax cuts and the Bush tax cuts had taken effect, we had the internet as a catalyst for all that future growth. And from, essentially all the 90s, we saw hyperbolic growth leading into 1999 before a big pop, right? A 3-year mass exodus out of technology, which caused a big issue. We have the opportunity to have another catalyst because of artificial intelligence, machine learning, the ability to harness that across the entire landscape of American and world business. Imagine as a farmer, if you do not have to spray herbicide on everything, not only because of the cost, but because of the caustic nature of all those things that can kill wildlife and kill plant life and kill these things. Imagine if you could have a drone that goes out and finds that one bad area, isolates, sprays the herbicide only on that one area, and the rest of the crop is unaffected. Imagine just in agriculture what could be done to be able to see how the soil is eroding and or how much water is necessary in certain parts and be able to produce water. This is what AI, machine learning, and the ability for us to see, this is what's happening.
Got it.
This is wildly sexy to say anything else. This is just how we're seeing the evolution of things. That's agriculture alone.
Okay.
I was talking to an offshore miner. Guys, do you know that they're drilling and mining gold in the depths of the ocean? I talked to an offshore driller and I asked him, what on earth are you drilling for? Are you drilling for oil? He said, no. We work for De Beers. We find diamonds underground because the weight of the water in the oh my gosh. He goes, and not only that, not only finding diamonds and gold, we're finding all these lithium deposits, which are what we use to make all of these batteries, at least at the moment, that power all of these electric cars. All of this is able to be discoverable because AI and all of these things that are now evolving because of computerized learning. So do I think that we now have the wind at our back for modern technological expansion, also regulatory policies that are going to be helpful to promote this? And lastly, we actually have a president that I feel is going to have better diplomacy policies. And this is, I'm not going to lie to you, this is not typically a case with a Republican president, but to get the world to help unify a little bit. If it's out of fear, fine, but get them to understand, let's agree to things that are fair for everyone and let's progress, right, as individual nations, but working together. I think that all those things are a very good fuel to throw on the fire.
Okay.
Now, having said that, remember what happened at the end of the 1999 technological boom.
Right.
It imploded. It exploded and it fell apart. And it took 3 years of unfettered getting your face punched in by Mike Tyson. Not the now Mike Tyson that lost to, what's his name?
I know,
Jake
poor guy.
the Snake or whatever this guy was.
Yeah.
I'm talking about the old school Mike Tyson, the Kid Dynamite that could, with one punch, knock you out for days. But having that happen for 3 years, retirees can't handle.
Right.
So the main thing is what we have to learn from the situation is how can we take advantage of this potential opportunity, but protect our downside, protect our backside, if you will.
There has been a lot of talk because there's obviously a lot of smart investors taking advantage of where we have been in the market, earning and trying to make the right moves. And we talk all the time about all the brilliant people that you work with that are clients of yours, people that are doctors and lawyers and business owners and all these things. But when it comes to the financial perspective, it's like, I'm focusing on my career and my family. I don't have time to figure out all the financial stuff too, but I want to be doing the right and good thing because of this run we've been on with the market. Actually, some now are sounding the bell. CNBC's Jim Cramer, one of them, people are concerned about greed and excess. Here's what Jim Cramer was saying.
We ran a simple screen looking for U.S. listed stocks that are large enough to talk about on air, with total returns of more than 50% for the month of November. There were 66 darn stocks that fit that bill, which is an insane number. People are really making money, provided they are also taking something off the table.
And that's the idea. Provided they're taking something off the table, thinking about somebody who is smart and done well, but doesn't want to screw it up right before or in their retirement, John. How do you guide and advise people now? Like, what's our next move? We've done great. We're close to retirement. And now here are all of my market investments. Help me not screw it up.
Absolutely. And that's always the name of the game, right? So what Cramer just said was very interesting right there. What he said was just in November alone, there were 66 companies that are large. These aren't small cap companies. These are of adequate size where they could be discussed. 66 had a 50% gain in November alone. Now, what was that probably based on? Probably based on the election of Donald Trump as the next president of the United States. Probably. So is it speculative? Of course. But did it happen? It absolutely did. Now, imagine, and I've got all kinds of clients, me included, that are sitting on top of a mountain load of NVIDIA stock. Now, this is not anything to say you should buy it or sell it or up or down and left and right. Absolutely. I want to disclaim. There is no opinion I'm giving you, but I'm telling you this. I have a 12 bagger on my NVIDIA. If you put in 100,000, it's worth 1.2 million. You can do the math. I have clients that put in $30,000 that's now worth $4 million in NVIDIA. And the question is, oh my gosh, John, this is such an outsized portion of my investment portfolio.
But also it's intimidating. It's like,
it's like, wow, this is great, but this is now not just 10% of my investment portfolio. This is like 65% of my investment portfolio.
And now what?
I have been reluctant to sell too much at this point, but now we have devised complete strategies on at what point in time do we reduce that position? What time do we deploy? Do we use hedges? Do we use options? Do we use derivatives? Do we put them in different contexts? Do we put them in trust form and utilize different vehicles to get tax savings from it? Do we use different vehicles for income design? How do we do it? Every client is completely different on what they want to achieve. But the question is, and what Cramer's whole point was, hey, this has been really good if you hold on to the gains because you don't have to go that far back to look at the dot-com boom all the way through 99, beginning of 2000, became the dot-com bust, which the NASDAQ, which is the technology heavy index, was down 82% from peak to trough after the dot-com bust. So just like I was saying, just like that huge Clinton era, or at least Clinton was largely attributed to the growth factor of the late 90s. But if you look at that period of time, are we potentially going to have that happen again? Maybe. It could. But I know that without any question, all laws of supply and demand, all laws of physics and market momentum, what goes up will eventually at some point come down. The question is, will it come down easily and gradually where we can decide what we want to do, or will it go from a pop to an absolute fall off of a cliff? And that is what we cannot afford to have happen in the course of retirement. But by the way, the crazy thing is that's almost the doom and gloom. I've said it twice on the show. You're going to hear me say it the entire rest of the year. I am cautiously hyper optimistic about the opportunities, but that does not mean that we should be ignorant of the risk factors. The risks now are as high as they've ever been. We know that a single tweet or whatever they're calling those things these days, an X or whatever, can completely change markets. It can completely change geopolitical relationships. We have China issues. We have Middle East issues still at the moment. We still have Russia-Ukraine issues. And there's other uncertainties out there, right? And we have crypto. Crypto is going to be another weird dichotomy of how the world is going to shift and change, and it's going to potentially attack capitalism, at least the way we've seen the stock market run up. It could also be a benefit in the long run. But when you look at all those things, how do we get to retirement, feel comfortable that $1, $3, $5, $10 million we've saved, or $500,000, that it's going to be there so that we can use it. Well, guys, that requires a plan. And it requires more than just hey, I got good quality, diversified stocks and bonds and mutual funds. It requires a good bit more than that. I don't care what our friends at Edward Jones say. It requires a substantial, more big piece of the puzzle than it. Where's the income going to come from? Where's the protection laden in the portfolio? Is it a stopgap? Is it an actual blanket underneath us? What is it exactly? Because most of my clients, I want a hardcore line. I want you can't lose more than this, or this is a completely risk-free investment that still happens to just pay potentially double digits. And by the way, because interest rates at the second are still high, those are still out there for at least the brief moment. They were available all last year, risk-free investments that potentially have double-digit returns. So those are the things that we can exploit to ensure that our income stream is as good as we need it to be, but we can still participate in the upside. Whether you're using index options or option hedging, whether you're using sophisticated algorithms to help guide that way, or frankly, you just use someone like our firm who are very skilled and understand not only the political makeup of the artificial intelligence and machine learning industry, but we actually do use algorithmic designs to help craft these types of strategies for our clients. It's not right for everyone. Some people just need to own good old high quality, Schwab or Vanguard or American exchange traded funds. Super inexpensive. You can protect the downside, but you still have upside market potential. It really just depends on what your needs are, but you won't know that until you've actually had to quantify what you want, and will help you build where you want to go.
You have done well in the market. Now what? If that is the question you're asking, let's help you figure that out. RetirementSolutionShow.com is our website and where you can go to start the conversation asking these kinds of questions. Now what? To Jon and his team at J. Hagan Capital, they are here to show you what your options and opportunities might be. It's different for everyone, so we got to speak to you directly, helping you understand what those options are. We also have links posted in the show notes, so you can just click there. Or again, find us anytime. RetirementSolutionShow.com.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with Jon and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to Jon's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Incorporated is not licensed in all 50 states. To find out if J. Hagan Capital Incorporated is licensed in your state, please call 502-690-5635. J. Hagan Capital Incorporated is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital, LLC, NPN number 1882794.